Hi everyone. I'm Luke Alexander, President and CEO of Newcore Gold. Newcore Gold, we're advancing the Enchi project in Ghana. It's a district scale exploration project fundamentally underpinned by a 1.4 million ounce resource. I guess first thing I'll highlight is I will be making some forward-looking statements as part of this presentation. I guess my background, I spent the first 15 years of my career on the investment banking sell side of the business, advising ASX, TSX, London-listed companies on different mining projects and opportunities around the world. And throughout that, I really learned three things you need to make a great company. You need to have a great asset, a proven management team, as well as strong support from the capital markets. And we're very fortunate at Newcore to have all of those things. Starting with the board of directors and management team, you can see a number of the companies that we've been involved in here. These have been big successes for the for investors. We are also very well backed by deep-pocketed, long-term focused institutional investors. We're currently 40% institutionally owned. If you look at a few of these groups here, you probably recognize a number of them. So having that kind of support is crucial for pushing a project forward. We're also very well supported by the capital markets. We currently have 5 tier 1 investment banks covering us from a research perspective. So I'd encourage you to go and look at the research from any of those groups, as well as we've got a very good capital structure, only 120 million shares outstanding. So that's crucial as well. ESG is something that's crucial to us. Fundamentally, our view is that all stakeholders need to benefit in a project to ultimately push it forward. Looking at the country, Ghana, it is a tier 1 jurisdiction. You've currently got 4 of the top 10 largest gold producers on the planet operating in country. It's important for the tax base, it's important for the economy, and for us at Newcore, we've got a huge amount of skilled labor in country for us to draw upon. Looking at a few of those companies, you've got 4 of the top 10, as I mentioned, largest gold producers operating there. You've currently got Newmont investing an additional $750 to $850 million into the country. That will take them from 14% of their current global production to roughly 20% of global production. I think that speaks for itself in terms of what a great jurisdiction it is to be operating in, and we're very fortunate to have amassed such a large land package when we did. There's 2 prolific gold belts that run through Ghana. You've got the Ashanti Belt as well as the Sefwi-Bibiani Belt. 200 million ounces of gold historically discovered in Ghana. We've got great neighbors along trend from us. We've got Kinross's Chirano mine, historical endowment of 5.5 million ounces, 6.5 million ounces at Bibiani, and there's one of Newmont's 2 producing mines sitting at 15.5 million ounces. So very large deposits along trend from us. We've also got great infrastructure. We've currently got a paved road that goes right through our project to the town of Enchi. Enchi's got about 15,000 people, so it's got all the kind of support services we could want for our project. We can house all of our employees here, but also importantly, it sits far enough away from our project, about 10 kilometers as a crow flies, that we don't anticipate any issues when it comes time to bringing it into production. Sitting 5 kilometers outside of town, this is where our core shack sits, and this really highlights the infrastructure. There's that road you can drive 100 kilometers along, power, gas stations, cell phone towers. 10 minutes down this road and you're standing on top of our Boeing deposit. So great infrastructure, and that really feeds the economics of the project. Talking about the economics of the project, we did put a PEA out last year. It outlined a very simple open pit heap leach project at an $1,850 gold price. You're looking at an after-tax NPV of $302 million, after-tax IRR of about 54%. That's relative to the roughly $35 million US market cap we have today. So lots of upside in terms of the valuation gap that's currently presented relative to the share price. One of the things that helps drive that is the very low capex required for a heap leach project, 97 million. But for us, there's an additional 70,000 meters of drilling that's going to go into future resource updates as well as future economic studies, and that's where we're going to create value for shareholders. We also put out a resource alongside that PEA, so we currently sit at about 1.4 million ounces, 0.62 grams per ton. It is, again, a heap leach project, and if you look at heap leach projects globally, you're typically looking at about 0.3 to 0.5 grams per ton. So one of the things that really drives the economics is the higher grade oxides that we've got on our project. We wanted to accomplish 4 key things with our 90,000 meter drill program. We want to expand the existing resource at all of our known deposits, go back to previously drill tested areas, make new discoveries, and then lastly, start to make some high grade discoveries at depth with the deeper drilling that we're doing for the first time ever on the project. This is something that we have been accomplishing. I'll just take you into a couple of our deposits. What you're going to see here, these are the pits that constrain our current resource. These are the pits that constrain that 1.4 million ounces. You can then see all of the mineralized material that sits outside of those pits. That's where the resource growth is going to come from with additional updates that we do to our resource in the future. This is our second largest deposit, the Boeing deposit. It sits at about 500,000 ounces, and this one's a great example of that extension of mineralization at all of our existing resource areas. Boeing is a current 2.8 kilometer pit constrained resource. We've extended mineralization by about 1.4 kilometers, so it's pretty easy to start to do the math on what the impact that will have on future resource updates. Here you can see a bunch of the mineralized material within those pits as well. The other thing we've focused on is widening and deepening the overall size of the pits. Great example of that would be this hole number 230 or hole number 250 here. 276 and 250. Neither of these holes existed when we put out that resource update. So needless to say, 103 meters at a gram is going to help widen the overall size of these pits, as well as obviously hitting high grade like 95 grams over 2 meters is going to also significantly impact the resource in the future. Going back to the overall plan here, our third and fourth deposits are Nyam and Quachikrum. These are other areas that we've been meaningfully adding to the overall mineralized footprint. You can see that, with a bunch of this additional drilling that we've been doing. We're also going back, as I mentioned, to previously drill tested areas. This is an area we've done a bunch of follow-up drilling called Kojina Hill, and we'll look to wrap a resource around that over time as well. We're also very fortunate to have made 3 new discoveries on our project. We've announced all of those this year: Sium South, Tokasea, and an extension zone at the Sium extension. Very large targets, 6 by 3 kilometers in size, and these over time will add to the overall size of our resource. The last thing we wanted to do was make some high-grade discoveries at depth. What we're looking at here is a long section of our Enchi project. We're then comparing that to Kinross's Chirano mine. What you see with these greenstone-hosted deposits is that as you start to drill deeper below the oxides, they really start to grow in size and increase in grade, and we've been very fortunate to have made a number of high-grade discoveries on the project thus far. In the interest of time, I'll just take you back to Nyam and highlight some of these high grades that we've been finding on our project. 5.8 grams over 7 meters, 5.6 over 8, 5.4 over 9, 5 grams over 8 meters. These holes are only down to 150 to 300 meters below surface. So with confidence, we can start talking about how we've hit one of these high-grade plunging zones that we see at other deposits along trend from us. 500 meters to the south on the same structure, we've hit 3.2 over 9, 7.4 over 8, 3.5 over 9, 6 over 6 meters. So we can again start talking about how we've hit these high-grade plunging zones. So this has been a multi-pronged approach from an exploration perspective, and we've really accomplished everything we wanted with the drilling. So with that, top-tier management team who are truly aligned with shareholders, district scale exploration opportunity, and where we're creating the value for shareholders from here is obviously through that additional 70,000 meters of drilling that wasn't included in our current 1.4 million ounce resource or that PEA that we put out last year. Thank you very much.